Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 5th day of January 2015, and this is the daily report for gold and silver. What an awakening to 2015 as we have a major sell-off in the equities markets, plunging about 300 points on the Dow Jones Industrial. Oil drifting below $50 per ounce, and a surge in the precious metals markets pretty much across the board. First to gold, trading roughly $12.05, $12.06, right in that area. Puts it up about $15 on the day. The high $12.0840, the low $11.8660. Silver also showing a tremendous gain, up over 2.5%, 41 cents, back over $16, $16.19, roughly in that area, low $15.76, high $16.34. More on silver in a little bit. So traders, welcome to 2015. We're looking at a half a day chart, standard candlesticks. This is the cash market. And in this chart, I've simply put a couple of areas that we want to look at, and then also the fact that we have had these series of higher lows here, which gives us our level of support cascading to the upside support. I've also put in a lower resistance line. Now, these are all short-term market plots, so to speak, or technical studies, I should say. And we've also identified a couple of different key levels of support and resistance, and that is in essence based upon this one fib extension from the top of the market at 1252 down to 1130. Now, when we do that, we get a couple of different areas, and the 61% retracement comes in at about 1205, 1205.30, and you can see that's pretty much where the market is currently. Now, the one thing that I find interesting, and we'll go ahead, let's blow this up just a little bit, and that is we're absolutely still within the confines of this compression triangle that we've identified over the last couple of months in trading. So what does that mean? Well, my sense is that with this kind of a move up, and the equities market's under pressure, and that's what we talked about really throughout last week, is that my sense was that we'd probably see lower pricing, but that was with a caveat. And of course, the big caveat was, what would we see in the equities markets? And when we pull them up, we're going to see something quite interesting. And that is, we identify different areas that we should look for some sort of a correction. Now, realize that within this particular stock market, and my sense is that really to have a bear market come into the equities markets, we have to have a change of direction in either policy or the economy. Those two things can really turn a market around and turn a bull market into a bear market. So I'm not really seeing any of that. So what I'm thinking is that if we do see some weakness in the market, we certainly have seen it today, but if we do see some continued weakness in the market, we might be looking at some sort of a correction. And if we are looking at a correction, we want to plot a couple of different areas. And one of the key areas that I would look at would be the 38% retracement. I'm going to go ahead and bring that in a little bit in more detail, but that would be a 38% retracement. Realize I have an extension as well as a retracement here. So the retracement really starts at 1061, takes us up to 2093, which is the top of this market, and then plots the various levels. 38% would take us back down to 1698, and our 23% would take us roughly to about, I believe it's 1849, and that would be this mark here. So we're quite a ways away from all of that. But if in fact we were to see some weakness, we could see that weakness take us 23 or 38%, and that would be just based upon some sort of corrective action and then begin to move back up and plot higher. With that in mind, we also have the oil market under tremendous pressure today. Let's take a look at that chart. So traders, it's a very, very long-term study. This is a monthly chart. It's nothing to trade off of. But what's interesting is we've only had a couple of days in January. It's January 5th, of course. We only had the 2nd and today in terms of trading days. And then when we look at it, we are absolutely at the lows of the day right here at 49.80. And this for a monthly candle to appear on the 5th and already have this kind of a range right in here, to me, is pretty substantial. In terms of technical points, we talked about different areas that we might find the market go to, and I pointed out this one particular low here the other day. Let's try to make that a line. And you can see we've exceeded that point right there, and that was based upon this particular low. So we'll have to look at other areas in here in which we could find some reason to believe that there is some technical support. But as of right now, we've got a free fall in oil, but we've seen a free fall before. This isn't the first time. And the question is how low will oil go and how long will it stay in these depressed ranges? So traders, the other thing that we really want to look at, and to do that, I've pulled up a half a day E-mini, Standard & Poor's 500. This is the E-mini contract. You can see that we have basically one fib retracement on this particular study. It begins middle of October, roughly at 1814. Takes us up to about 2080. That was the former high. As a matter of fact, what we do want to do is at this point adjust this to represent the highs of the market to give us some idea of what we think we could see here. We have fallen through a 23% retracement. The next real level you would have to look at would be 1285. That's a 38% retracement based upon these shorter term studies. Now, how has that changed my basic outlook on gold? Well, it actually has, because here's what we're looking at. This, of course, is our 3-day study. I've gone ahead and blown it up very, very dramatically so we could take a look at where our current candle, these are 3-day candles, are in regards to this long-standing, or not long-standing, but interim resistance line that we've identified right in here, our support line right in here. We are now approaching the apex, and a break above this, and this is what we talked about last week, a break above this is definitely going to have me issue a buy signal and not a sell signal in the market. Because if we do break above this long or this interim standing resistance line, we really only have a couple of points to take out. 1232, that's a price we want to take a look at. And then right in here, I believe this is about 1241, and this is 1254 right in here. So those are the respective spots. If we begin to take these out, we definitely are looking at a rally which began mid-October when the market hit 1130, has moved up off of that and now broken above those resistance lines. If that is happening at the same time that we see continued pressure in the equities markets, that tells me that gold could absolutely move higher, and we absolutely need to adjust our strategy accordingly. So traders, now that we've actually looked to see how close the market is at 1205, I've gone ahead and recompressed this chart, because the one key that we want to realize is that if we do not get a completed fifth wave here, it would simply be called a truncated wave. And the fact is, and this is what we talked about, the key is that it remains above this kind of triple bottom that we got. The numbers that I'm looking at are 1254, 1268. If it holds that support, which it absolutely has, and breaks above this line, to me, that's bullish for the precious yellow metal. So traders, what about silver? Well, there's absolutely some rationale behind not being as bullish on silver. Although it's moved up tremendously, it is a thinner market. My sense is this: in terms of our support level, if we can hold above $16, and that's going to be basically this particular line right in here. We're currently just at there at 16.16. The real level of resistance wouldn't really come into the market till about 17 to 17.20, and that's really based upon this bottom here. As I said, today's market move specifically in the equities markets coming down 300 points. We're certainly not going to get what they call that Santa Claus rally, because that's got to continue for the first couple of days within the market, is surprising to many analysts. We realized that this was a distinct possibility, although I felt in terms of probability it was lower on the scale than some other models we were looking at. But facts being facts is we are seeing the equities markets under pressure. Crude is broken below a key level, which is $50. Dollar is trading at 91.64, so that's off of the highs, but not by too much, but it is trading a little bit lower today when we look at our weekly or daily charts on the crude oil market. So all those things being equal, we could actually see some sort of a nice rally in the precious metals markets, and that's why we remain sidelined, because we really want to gather the information today and tomorrow, make our decision, and then place our trades. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another daily update review. Bye-bye.